Hello and welcome to our webinar today, which is all about iOS and VAT and trading across the UK-EU border. And we've been gathering up a ton of questions on TameBay, your questions that you wanted answered. So I'm delighted today to welcome Rick Verma from Avalara, who's hugely experienced in this area. And hopefully we'll be able to get through all of your questions today. So welcome, Rick. How are you?
Yeah, good. Thank you. Thanks for having me, Chris. It's good to be here. Hopefully I'll be able to answer some of these questions for you today.
Yeah. So I think first of all, Rick, you're going to be kind enough just to give us a high-level overview of what the changes are for anyone that still doesn't know. And the background to it is that there's been a lot of VAT legislation around the world to try and make things easier for us, but coupled with Brexit, there's been one change after another. So let us know what's been going on. What do we need to be aware of?
Yeah, absolutely. So I've got this put together just to cover the high-level changes and to walk the audience through it. Hopefully, I won't take too long going through them all. I think what's also important before we dive into what's changing, just to quickly look at the drivers of why it's changing as well. Yeah. So if we just begin with last year, if you look at globally what we spent, over 21 trillion US dollars was spent shopping across all retail channels, including your normal high street stores and local shopping malls, etc. That's a pretty measly 1% year-on-year growth rate, Chris. So, given the state of the world, at the time and even to a certain extent now, perhaps the good outcome, at least we didn't contract. $4.29 trillion of that 21 trillion was spent shopping online. So that's 20% of all retail. The year-on-year difference between 2019 and 2020 is a massive 24.1% growth. So that's, the pandemic basically skyrocketed e-com growth, Bezos and Branson style, really, really quickly. If you look at the growth rate in e-commerce from 18 to 19 was 17.9%, or 2.93 to 3.46 trillion US dollars. The trend over the past 5 years has been relatively strong growth all the way through. Pre-COVID, it's primarily been driven by a combination of businesses investing in e-com online, the e-com presence, big marketplace disruptors that we all know, and us consumers wanting goods faster and in a more convenient fashion right now. And the incredibly interesting piece for this audience and for us is 2/3 of all that e-commerce growth has come from global marketplaces. That's $2.67 trillion spent through marketplaces last year alone. Just over 28% of that belongs to the Alibaba group, by far the largest player in the space globally. Then just over 11% with Amazon. Everybody else in the e-com space, in the marketplace space, consolidated is just over 60%. Now, let's take a look at the compliance landscape in these major jurisdictions as a result of this growth. So what happens when you grow that quickly? Tax offices, obviously, globally want to increase efficiency in collecting sales tax, VAT, GST, to ensure there's a level playing field and to reduce fraud. This means effectively there's a fundamental shift from taxing marketplaces to taxing from taxing marketplace sellers to taxing marketplaces rather, particularly on behalf of those sellers using distance sales and cross-border models. So in the US, this can be attributed to the South Dakota Wayfair case that happened in 2018. And then since then, you've got the UK, Norway, India, Australia, New Zealand, and other, these are just some of the major economies putting marketplace facilitation laws in place.
But I think it's worth jumping in and just pointing out one thing here, Rick, that the UK actually went ahead of the EU here. So although many TameBay readers are based in the UK and thinking, what are all these problems I've got selling to the EU? The EU changes only just came in July, but the UK changes, which affect EU sellers and the rest of the world, they came back on January the 1st. So we're actually in the UK, we're behind the curve with everyone that's selling to the UK. I've heard it's quite a few times as people say it's unfair, why the EU doing this to us, I think it's fair to just point out we're also doing it to them.
Absolutely, it's working both ways, Chris, and it's the tax gods aren't kind. Brexit and the UK OMP law came in at the same time, literally at the same moment. So that complication overnight was very difficult. And from a legislation perspective, the UK OMP law is very, very, very similar to the EU law, right? Instead of 150 euros, it's 135 pounds. So there's, it's I don't want to say it's a copy paste of the legislation, but it's not far off. There's just a few additional words that confuse everyone, but it's more or less the same. Right. So let's take speaking of the EU, let's take a sort of a closer look at the EU and their fiscal drivers. So these figures actually include UK, so they're pre-Brexit numbers. The VAT gap is the difference, if you don't know, between what is expected revenue for the union and what's actually collected, so the delta. For 2018, it was 140 billion euros. And because of the pandemic, the forecast for 2020 is 164 billion euros. Again, there's many reasons for this, but you could plug a simple part of it by introducing marketplace facilitation laws and holding a few companies and marketplaces accountable rather than lots of sellers. You don't have to deal with sort of sellers globally, just a few marketplaces as a tax office. So it's simpler for the sellers, it's easier to buy goods from abroad, and of course it's less prone to fraud. So I guess what is the EU doing to simplify plugging this gap from a compliance perspective? And what is the e-commerce VAT package? Now, from the start of this month, the EU introduced this package with 3 key components, and this is the first key component of it. Today's rules require sellers selling their stocks from Europe separately, not today, rather, last month's rules to separately register in lots of different countries. This is cumbersome, it's expensive, it limits efficiency of the EU single market. So the EU's introduced this one-stop shop registration and return. This enables EU and non-EU sellers to report sales of goods from stock already in the EU in all 27 member states via just one registration and filing. So an EU-wide 10,000 euro threshold is now in place, rather than a country-specific threshold, which was in place with distance selling in the past. So they've all now gone away. This is the first piece. The second major piece is the IOS. So this, the second biggest change is how the EU charges and collects import VAT goods being shipped from outside, so internationally, to consumers in the European Union. Remember, this also now applies to the UK as we're outside the European Union. The 22 euro exemption is now scrapped on import VAT, so all goods will now be subject to import VAT. To deal with this, the EU introduced this import one-stop shop, or IOS, not OS as a previous slide to be clear, but IOS. So online sellers or marketplaces can use this to report on import VAT charged in the checkout, and this can be declared monthly. International companies can also use this like EU states, but non-EU businesses must appoint a VAT agent or an intermediary to do this, and that's something Avalara can assist with. Lastly, the EU is putting marketplaces now on the hook for VAT collection and reporting obligations of many of these transactions that take place on their sites, making marketplaces the deemed supplier. There are 2 specific type of transactions we're facilitating marketplaces responsible for VAT. The first one is any import of goods being sold to an EU consumer that doesn't exceed the 150 euro threshold. It could be a German, a US, a Chinese seller selling something online, which is then shipped to a consumer in the European Union. In effect, when that happens, the international seller has to first sell the goods to the facilitating marketplace without VAT, so it's a B2B exempt transaction. And then the marketplace has to sell the goods to the consumer with the local VAT applied, the local EU VAT rate applied. The second, for non-EU sellers only, so this is sellers, again, for you from US, UK, or China now, if the goods were already in the EU at the time of sale, so fulfillment centers, effectively, then a marketplace is responsible for those as well. The value of the sale at that point, the 150, is immaterial, and the 150 threshold just wouldn't apply in that particular case. The definitions are pretty interesting here as well. So you can be a facilitating marketplace or a deemed supplier. If you control the terms and condition of the sale, you're responsible for either ordering or delivering the goods, or indeed if you're authorizing the payment process behind that exchange. So to help the marketplaces, the EU has introduced these OS and IOS returns to keep compliance obligations relatively simple where possible. Now, this is all lovely and great. So what do I actually practically need to do now that I'm responsible, right? That's what most of us are really interested in here. Well, to begin, when a transaction takes place, you'll need a code, right? A CA&HS code to ensure the correct rate of VAT is applied to the product, so it's classified properly. The second piece is then what type of transaction is it? Is it an import? Is it a return? Is it a movement of goods within warehouses if you offer fulfillment as a marketplace? Is it B2B? Is it B2C? Then, of course, it's extremely important, am I the deemed supplier or the facilitator for these transactions as the marketplace? Is it me who's responsible? Is it the marketplace, or is it the seller that is responsible? Is the seller using fulfillment? What's the value to track that threshold piece? Then based on this, we have to calculate the VAT properly based on these relevant rules. Are there exemptions that need to be applied? And all of this has to happen in real time. And then we move on to the invoicing piece. You'll have to provide invoices as a deemed supplier. The question becomes, is it me, the marketplace, that provides these invoices, or is it the seller who's liable to provide these invoices? You could use self-billing mechanisms if you have agreements with your sellers on your marketplace. We're seeing a lot of the major marketplaces do this now to simplify this process. We also have to figure out what's a relevant EU article that's needed on the invoices. So do you need a customs invoice as well? Could be an important piece of it. And then, of course, are you keeping the relevant records associated, that you need to by law in case of audits? And then how are you sharing and reconciling that data with your sellers as well to ensure there's synergy between the two? Lastly, are the relevant registrations in place from a compliance perspective? And is the relevant compliance mechanism set up with the correct reporting requirements? Not just for me as the marketplace, but also the sellers compliant. Am I the marketplace checking VAT numbers when I onboard these sellers? What are the checks in place to ensure sellers are keeping compliant periodically? So you have to check through that as well. And not, of course, forgetting that reporting, again, has to be consistent with the sellers in case tax officers are reconciling between your records and the seller's record, which they will. So yeah, for the most, for most marketplaces, particularly the smaller ones, that's a lot to do, specifically the real-time piece. It's not all doom and gloom, though, Chris, I promise. These are simplifications that will allow, the cross-border trade we're trying to accelerate to grow and to simplify e-commerce within the EU. The good news is Avalara can help with all of this. We have a suite of item classification, tax determination, compliance, reporting, fiscal representation, e-invoicing solutions and services offered globally. So no matter how complex a compliance piece may be or a tax technology requirement is, we have the best-in-class solutions and teams to solve these 4 marketplaces specifically. I won't do a sales pitch here, but if anybody out of the Tame Bay audience wants to reach out and discuss this, we can certainly assist. I'll stop sharing now and we can get back to our chat.
Yeah, so I've got a ton of questions for people. And the first one's really pertinent because when we heard these changes were coming in, there was that kind of 6 months from Brexit to the 1st of July where a lot of sellers said, look, I'll just stop selling for 6 months because when the marketplaces are collecting VAT, I don't have to worry about VAT anymore. I can deregister and forget about it. But what do I need to worry about? Because you've talked about sales of more than 150 euros that I'm still responsible for the VAT for. I'm not really sure if I've got, say, a €100 product and someone buys 2 of them, and then it's a €200. Is that over 150 euros and I have to deal with it, or does the marketplace deal with it because the unit price was under 100? And also, what about things I sell on my own website where it's not a marketplace and I've got to deal with the VAT? So what do I need to worry about? What should I be looking out for that I need to address?
Yeah, so I suppose if we separate the e-commerce sellers or the marketplace sellers, or even if I have my own business liability versus what the marketplace is responsible for, right? 2 different things. So if you're omni-channel, including your own website, you're going to have significantly more compliance requirements that you need to review, including, yes, the marketplace is liable, but you still may be selling items under 150 directly to an EU consumer on your own website. So you need to consider having your own IOS registration in that particular circumstance, for example. But look, from a marketplace perspective, simply a marketplace now has more compliance exposure than ever before. That's, if you just sell on those marketplaces, then yes, it's great for you. Your compliance exposure is lowered, and my marketplace's exposure is increased. So as a marketplace, the questions I would worry about is, can I do real-time tax calculation? Do I know if I'm liable, or is it the seller who's liable? How many channels is that seller selling on? Do I have the right compliance setup? So meaning, do I, as a seller or the marketplace, have the relevant registrations in the right jurisdictions? There's a lot. Ultimately, if you break it down, it's 2 key things to worry about. Can the technology and processes within my business as a seller or as a marketplace, right? Do I have that set up to handle the new rules to ensure that I, as a marketplace, am complying with the new rules? And the second, can the technology and processes we, as a marketplace, have in place ensure the sellers on the marketplace are compliant? Because they're they're interlinked, and we can do a bonus third. Is it all scalable? Right, because we all know marketplaces scale quickly. Sellers want to sell in lots of countries. Is all of this scalable? So those are sort of the key worries and challenges I would have as a marketplace and as a marketplace seller. And ultimately, it all comes down to whether you have the relevant technology, the tech stacks, and the processes in place to ensure compliance.
Excellent, thanks for that. And then another question. I know you kind of touched on this, but what's the difference between IOSS and OSS? And I think behind this question, it's kind of like, if I'm in the UK selling to Europe, then obviously it's IOSS. But do I have to register for OSS if I, for instance, got stock in a fulfillment house in Europe and selling on my own website, for example? What's the difference? And how do I know which one applies to me and when it applies to me?
Oh, that's a great question. By calling Avalora, you can find out the answer now. But simply put, IOS is only applicable to goods that are imported into the EU with a consignment value that is less than 150 euros. That's simply put. So IOS is very, very relevant for marketplaces, but not so much for marketplace sellers, unless, as you pointed out, they sell on their own website as well. Then it becomes relevant. So IOS, the I import, that's the focus there. So most marketplaces have opted to provide their IOS numbers, as you may have seen, to their sellers to ensure compliance at the border when goods are being imported. OSS, on the other hand, is a simplified VAT return registration and return process that replaces our previous distance selling methodology. So instead of needing the 27 registrations for doing distance sales, you can now just declare all of it on one return. So for example, if you're a German business selling into France, Czech Republic, and Spain, instead of needing to register for those 3 countries, once you've crossed the threshold per country, you can now just opt, because you're a German business, for your German OSS. And that'll keep you compliant. The OSS threshold, let's say if you're a UK business, EU-wide, and it's not a German business, but a UK business, is €10,000. So rather than per country, it's that. So those are the differences between IOS and OSS.
And the €10,000, does that include what I sell on marketplaces under iOS, which the marketplace deals with, or does it exclude that?
So, it's a good question. If it is a marketplace's responsibility as a deemed supplier, and they are accounting for all of that VAT, it would exclude, because they would be.
That at least makes it easier.
Yeah, and the OS threshold. So if you sell 2,000 to Spain, 2,000 to Germany, 2,000, so on and so forth, you just need to hit 10,000 consolidated, and then just that one return. If you're a UK business, you can just choose the country you want to declare that from.
Now, something that we've had a lot of questions on is the importer of record. Can Avalara help us with there? Because if I'm right, you need someone within the EU to sign off on these transactions. Is that correct?
Yes. Well, I mean, so I guess the question is, if I'm a marketplace, this is what we usually tend to get a lot of is, as a marketplace, can I be, particularly the smaller ones, can I be the importer record for all of these transactions, right? Could it be me? Generally, yes, you can. Whether or not it's a correct decision from you, from a risk and compliance perspective, it's a case-by-case discussion for the most part, and really it should be done in consultation with your own tax advisors as a marketplace. From an Avalara perspective, we can definitely help on the systems and technology piece of it all, and based on what the tax advice coming through is, but there's legal setups that would need to be in place for you to be the importer of record on those transactions. And Avalara does provide intermediary services to assist with some of that.
So I guess this is a case of get in touch and find out more for your individual circumstances. Hard to give an overall.
Yeah, it is, because you can have, it's difficult because you could have a marketplace that's got a standard EU business. You could have a cross-border business. You could have a seller with lots of different operating on different marketplaces and their own sites. Some may be holding goods, some may not be holding goods. Some are importing certain goods, some may be drop shipping. So as much as I would love to give a silver bullet answer to every, it becomes difficult, and a case-by-case discussion has to be in place, and tax advice has to be sought as well.
So while we're talking about your services, what service can you provide for people and assistants that need a new EU VAT registration? Because there's probably going to be quite a few that pre-Brexit never had to worry about it. You just did your HMRC return, but now €10,000 is really not a lot, not a very high threshold before you have to register.
No, spot on, Chris. No, it's not very high indeed. And Avalara enables businesses to register and we also file the returns. So depending on many sellers and many marketplaces don't necessarily have the resource, the capability internally, and frankly should be spending their time on their core business practices, perhaps not worrying about which country you need to register in and the rest of it, focus on the selling. So we can help these businesses, marketplaces and sellers register and file returns. For non-EU businesses, we also provide fiscal representation and intermediary services, so UK businesses in that particular case, given that fiscal rep and intermediary services are mandatory for these businesses. It's a big part of the service offering we have. Other than that, we offer end-to-end compliance services in all EU countries, including IOS, OS registrations, and also worth mentioning, Avalara is a global firm, so we go much beyond the EU as well.
Excellent. So a question that we've had asked a few times is, why does this have to fall on the marketplaces? I'm not thinking of the massive Alibabas, Amazons, eBays. I'm thinking the smaller marketplaces, the maybe niche marketplaces that it's quite a burden for them. Why has the marketplace got to deal with this stuff?
Great question again. I mean, if you refer back to that, don't have to go on, but that gap slide I showed in the EU, for example, right? Simply put, it's to plug the tax revenue gap, right? The delta. So, tax offices over the years have wised up, right? what's the best way to generate tax revenue in a quickly shifting e-commerce and digital landscape, right? Taxing one source in the marketplace is much more effective than taxing every transaction for each individual seller, on that marketplace. So, simply put, it's to simplify burden, reduce fraud, and actually simplify, the process for those sellers. And as a marketplace, it's a really good, rich opportunity for expanding cross-border trade. And having the right indirect tax compliance processes and partners in place helps with that, right? Yes, it feels burdensome, but because it's less burdensome for the seller on your platform, it's more beneficial for you because there'll be more of them.
And does this apply to all marketplaces? I'm thinking, supposing I'm a small business and I've got my own website, but I let other people list their products on my website. And I don't want to name a small business and pick on anyone, but let's say it's someone like Decathlon have just opened up a marketplace. Do they have to do all of this stuff from day one, the first EU sale they get from a UK seller on their marketplace? Because if I'm smaller, maybe I've only got a few thousand turnover of my own business and I let a few other people list on my site and that adds another 1,000. So I kind of 3,000 a month and I get 1 or 2 sales to the EU a month. Do I have to bother with this?
Sadly, yes, if you meet the 3 conditions. So sadly, and depending on how you look at it. So the 3 conditions being, if you control the terms and conditions of the sales on your, if Decathlon does it on there in the marketplace, if you're responsible for the ordering and delivering of the goods, and again, if you're authorizing the payment, and you just have to meet one of them, by the way, not all 3. Basically, yes. If you facilitate the sale of tangible goods from businesses to consumers, yes, you can always get in touch with Avlara and we can help find out quickly if you're going to fall into these rules or not.
Yeah, so actually a barrier to entry for new marketplaces, sadly. So the next question is, how does a merchant account for the transactions they're responsible for? And I suppose the flip side's always so interesting. How does a marketplace account for the transactions they're responsible for? And I kind of mentioned this earlier. How do I even know which transactions I'm responsible for? Like, if I'm selling the €100 products and someone buys 2 of them on one order, am I responsible? Is the marketplace responsible? Will the marketplace tell me if they collected the VAT or not? I mean, I really haven't got a clue how I can actually keep my transaction records no matter how much I want to.
Yeah, and it all comes back to that old piece, right? You're absolutely right. It is complex, and it comes down to that: how many channels, where, fulfillment, non-fulfillment, all the different caveats, right? I mean, I guess at a base level, going back to the ultimate 2 things that you need to figure out. What is the tech and process in place, right? So you effectively need to ensure the back end, your tech setup can do this and can cope with it. Accurate compliance and good customer service will always be predicated on charging the correct VAT destination where the goods are at the point of sale, right? Like wherever they're going. But you need to charge the VAT, and it's going to provide a good customer service. So as a marketplace, you need to have the correct data points being collected and use technology to ensure in real time you're figuring that out, right? Who's the liable party for invoicing, for charging the VAT, where it goes. And then, of course, you need to ensure whether it's using IOS, OS, or whatever VAT return registration you need to, that you're declaring this properly. But it ultimately just boils down to that: do I have the right tech setup to figure out where I'm the deemed supplier, the not the deemed supplier, if I'm liable, if I'm not liable, and then once you figure that out, to file it appropriately and be audit ready as well.
And can I get around this by, if I do have that €200 sale, does it make a difference if I ship the 2 items separately in 2 different parcels, so it keeps the value under 150 euros? Is it transaction based or is it parcel value based?
Consignment value based. Yeah, because if you go back to major marketplace, multiple sellers in the basket, right? invoicing gets complicated. How the package is being shipped will have a bearing on this as well. So if I'm a major marketplace and I have my own fulfillment centers, I get X number of goods in a package ready to go, that's going to have a different tax treatment than if it's just me telling the seller to send something. And if at that point the seller decides I want to send it in 2 different packages, 100 and 100, and it's a deemed supply. And a marketplace needs to be able to have processes and technology in place to be able to instruct how that works, and have policies in place as well. I think policy is a big part of this. Having the correct policies, making sure your sellers know what they need to do.
Okay, so we covered that I either need iOS or OSS. How does it actually work when it comes down to it? I mean, in the UK, generally people get a tax return, do a VAT return once a quarter. What do they have to do with iOS? What do they have to do with OS?
Yeah, good questions as well. So practically speaking, first you need to register to take advantage of either, right? That's practically speaking. So for iOS, you need to collect VAT that's due on the transaction at the point of sale. That's a big thing. So in the checkout, in the basket. You are then required to file an iOS return and pay the amount of tax due for all transactions that qualify in your monthly iOS return once you've registered.
So it's monthly, not quarterly?
Correct. Yeah, this is for iOS. If you're the deemed supplier to the marketplace, you also need to send an invoice with your iOS number, assuming that you're okay with that risk piece, and the correct VAT treatment to the seller. So that's really important. And then as a deemed supplier, you're effectively making an end-to-end, well, you're transacting with the end consumer. So therefore, the seller has to send a B2B exempt invoice to the marketplace to change the owner of the good. So it's B2B flash transaction that takes place with 0% VAT. Many marketplaces have opted, the major ones certainly, to use self-billing mechanisms to generate these invoices on the seller's behalf and comply with this. So that's the iOS piece. And for us, it's the same in that you need to figure out which transactions are your distance sales. You can then report on these on a quarterly basis for us, for the country you're registered in for us. This can be anywhere for a non-EU business. If you hold stocks in a particular country, it should be there. For EU businesses, it has to be in the country of your establishment. So if you're a German company, it has to be a German OS. It can't be a French OS. And
so you just said something interesting there, which is which countries do I register in? You said if I've got goods in one country, it should be that country. But let's say I'm selling, I don't know, let's say I sell on Amazon, I'm using FBA. I've got goods in France, Germany, Czech Republic, Poland. If I can choose, does it matter where I register? And more importantly, are there any countries where the paperwork's easier or it's cheaper or the VAT regime is just easier to deal with? I'm thinking, for instance, Ireland speak English. Is that a good country? Or I've heard the Netherlands, a lot of people are registering there.
Mm-hmm.
Are they better than Germany or France? Or how do I choose?
Yeah, loads of good questions there. So going back to the first piece. So if you've got, let's say you use FBA 7 and you've got you can choose at that point. You're holding, you can choose which one you go with. But if you're primarily in the Netherlands and that's your main warehouse, then the Netherlands should be where you begin. Now, there are, yes, language can play a part in where you may choose to register and which tax office you choose to work with. There are some, so the Netherlands, for example, has a accounting deferment scheme called Article 23. So to manage cash flow, you can defer paying import VAT in instances. So there are some advantages. Again, going back to that, what is it that you do as a particular marketplace or seller? We can have a discussion, and then we can walk through, based on this scenario, we think this is the best. Now, is it cheaper or less tax? Is the tax efficiency mechanisms? Unfortunately, with an OSA and IR, it's one tax office may be responsible for getting you to getting the VAT paid out of you, but they are also responsible for decimating that VAT to the different tax offices around the European Union. And this is where it gets tricky, because you have to apply the correct rate of VAT, local VAT. So if it's if it's country X, which has a 20% VAT regime, they would still have to pay 23% to, say, Czech Republic, if that's the VAT rate there, and the correct VAT rate has to be applied to be able to figure out what the VAT due is. So by registering in a country where the VAT rate is lower will not mean that you pay less VAT.
Yeah, I have to say, I'm constantly surprised that the EU hasn't imposed just a standard VAT rate across the whole territory yet, just to make life easy. But 19%, 20%, 22%, 15%. There's so many different countries. And I guess if I'm selling on my own website, I need to know what those VAT rates are at the point of sale, and have all of that built into my checkout to automatically collect it.
It's spot on, exactly, and the declaration is simplified. Chris, you've been spending so much time, I think, on this VAT piece. You've become a massive expert on it. That's spot on, right? You've got to at the point of sale figure out what the VAT rate is, and then use the return to declare it, but with the correct VAT rate.
Yeah, and that's obviously got to be a technology solution on the fly. It's got to be some sort of software built in, either from Avalara or someone else, but I'm
exactly.
going to need software, checkout software there. So this is all quite a lot to take in. I think I still go back to that. It's meant to be easier because it's just one VAT return, or the marketplace is doing the VAT for me. We were sold on this as it's going to be easier, less paperwork, one VAT return, or maybe no VAT return. So how complicated is it actually to get compliant now? Because I've heard all sorts of retailers that even since the Brexit have just said, look, we're not going to sell to the EU at the moment. And from the 1st of July, it's meant to be easy. But I still hear retailers saying, look, I'm just not going to do it. It's too complicated. So tell us what to do to get compliant, and how easy or how hard is it actually?
Yeah, no, that's a fair question, fair point. And reporting can be simple with the new rules. It is simple with the new rules, right? Particularly for marketplace sellers, it is simple. It's the tax calculation and preparation piece that's difficult without the relevant mechanism of doing so, technology. But back to that tech point, right? So if you have a e-com platform that you use to build your site on, to ensuring that there's the relevant tax calculator and preparation mechanism available, and it makes a huge difference. Once that complex piece is done, the reporting can be very simple, right? You can file your returns. You can use outsourced providers like Avalara to file your returns. Yes, it's become more difficult for the marketplace, but I think for marketplace sellers, it is simpler. It is much simpler, and it's cheaper. If we go back to last month, go back to I gave the share last year. If you think about how quickly certain marketplaces have grown, how quickly they've onboarded sellers, from a global perspective, particularly offering fulfillment services, the compliance burden of them as of 27 days ago has dramatically reduced. So it is a positive. A few challenges for the marketplaces, and they're not overly complex to overcome once you kind of get to grips with the rules. It takes a bit of a read, a bit of a discussion, and you can get there.
Yeah, and I'm guessing from a marketplace perspective, they're definitely going to need some help on this. But from a merchant perspective, if they sell on marketplaces and their own website, the chances are the majority of the sales come from the marketplaces they trade on. So they hopefully they can just like, okay, don't have to worry about that. That's the marketplace's problem from now on. The marketplace self bills me, less the VAT. I get my money. That's the end of it. But for those sales over 150 euros or on my own website, how easy is it actually just to fill out the return? Is this something I could do myself? I mean, I'm thinking I've sold something to France, something to Germany, something to Spain, something to Poland. I've got different VAT rates and everything. How hard is it actually just to fill out the tax return? A UK tax return, 7 boxes, job done. Um, I'm assuming it's a little bit more complicated if I've got sales to multiple countries.
It is more complicated if you have sales in different countries. It also depends on why you need to file the returns. It also depends on where you're based. For a UK business, for example, it's not just about being able to file a OS or an IOS or an Italian or a German or a French tax return. You'll need an intermediary in many cases, a fiscal representative to back you in those countries, to be able to allow you to trade in those countries. So in many cases, that becomes the case. And again, an Irish VAT return is simpler than an Italian one, right? Broadly speaking. So
well, it's in English for starters. I'm thinking countries like Polish. I don't know how many people speak Polish. I know a lot of people have people in their businesses that maybe speak French or German, maybe Spanish and Italian. But when you get past that, I think the language, just the language of completing the tax return is going to be a challenge.
Yeah, absolutely. When we deal with some of our enterprise larger marketplace clients, right? So they have sophisticated tax teams with multiple languages, and even they can struggle in some instances. Forget the smaller seller or the smaller marketplace business. They have a real challenge with those language pieces, right? It is extremely difficult to, again, Hungary. You've got SAFTs, you've got e-invoicing. You've got, depending on what you do, the web of compliance can become very, very complex. So going back to the EU VAT reforms for a second, if primarily what I do is marketplace activity, and let's say I'm a UK business and I do fulfillment, good, easy. Marketplace is going to do the bulk of what you're doing and figure out the compliance piece for you. Your own website, other 3PLs, other complex supply chain pieces, dropshipping, etc. The more you do, the more complex it gets.
Well, Rick, we're kind of coming up against time here. So I really want to thank you for taking so many questions from the Tame Bay audience today. And also, I know you've got a fantastic landing page for anyone that wants to find out more, which is just avalara.com/ios. So avalara.com/IOSS.
Yep.
And if someone wants to find out more, is there someone they can talk to or drop an email or connect on LinkedIn? How do they find out more?
Yeah, you can absolutely connect with me. So Rick Verma, you can find me on LinkedIn. You can also email me at rick.verma@avalara.com. I'll be happy to support and guide you in the right direction and to the relevant teams within the business.
Fantastic. So coming back to where we started, I think the good news is for those people who in the past have maybe had 3 or 4 or 5 or 6 or 7 VAT returns to complete the EU, this is definitely simpler. Definitely. If you're selling on marketplaces and the marketplace is dealing with everything under iOS, it really is simpler. But there may be some sales that you still got to take care of. So contact Avalara, rick.verma@avalara.com, avalara.com/ios. Have a chat, find out what you need. And I know from experience that you guys are very happy to talk that to people all day long, even if they don't need your services. But at least there's somewhere they can go to get some guidance and find out what they need to be aware of. And I think the really important thing for everyone watching this is you've got to have that importer of record who is your fiscal representation in the EU. So if that's your stumbling block, definitely pick up the phone or email Avalara, and they'll be able to assist with that. Because anything else you can possibly do yourself, it might take a long time, be very difficult. But the one thing you can't do is base yourself in the EU if you're in the UK. So that's one thing everyone will definitely need help with. But I think from the technology perspective, just being able to have those VAT rates across the EU in your checkout, have assistance completing your VAT return. I hate VAT returns the best of times, but the one thing you need to do is get the EU ones right and done. So if you need help with that, again, Avalara. Rick, I really want to thank you again for your time today. An amazing amount of information, and thanks once again for answering so many questions.
No, pleasure. Thank you for having us again. It's always great to speak with you, Chris. Thank you.